Back to Market on Close. I'm Marley Caden. Gold has been a hot topic here as it continues to march to all-time highs. Today, hitting another all-time high, going over the $3,600 an ounce level for the first time. So I'll bring in our next guest to discuss. Joining us is Scott Bauer, the CEO of Prosper Trading Academy. Scott, what are your thoughts on gold's rally? I feel every other day we're having another discussion about a new all-time high or the possibility of touching one.
It sure seems like that. And as we've discussed, numerous times here, gold has been a buy the dip. It's been a buy the dip for 6, 9, 12 months, any sort of pullback. It's been absolutely the case. This time, Marley, I actually, and this is full disclosure here, took a short position today. I think this is the first time that I have seen where maybe this has gotten a little bit of ahead of itself. And I say that because if you look at the spot gold price, which did hit an all-time high, and if you look out to the December futures, the December futures are actually pretty much unchanged. So I think that we have gotten a little too far ahead. Definitely could be wrong, but this is about the first time in a year or so that I've said gold could be a temporary short. I am still very, very bullish longer term, but I think we just got too far ahead of itself.
So I want to get your thoughts on something I read out of Zaner Metals earlier, and knowing now that you're short today, but this is just a near-term projection, so
yes,
it could still be in play. Zaner said that they thought gold could extend its momentum towards 3,700 to 3,730 in the near term, and I thought of you because they said any brief pullbacks would likely be seen as a buying opportunity. So I'd love to get your thoughts on their projection there.
I don't disagree with them. I mean, I don't know if they're talking about, weeks, a month. But this, to me, this rally looked like it was almost, expecting too much out of the Fed. So that's why I took this opportunity here, and I did it using GLD put options. So I didn't short gold futures. I used GLD put options. So I have a very, very small amount of risk, very limited risk if GLD doesn't go down, to what I paid here. But I do think there's an opportunity to see GLD probably pull back to about 325 or so. 320 is actually my entry point. So again, on that buy the dip notion, that's the area that I'm looking for, that if we did pull back there, I would take a long position, no doubt.
All right, so now let's move into Bitcoin. Bitcoin has been pretty tightly range bound of late.
Very much.
Reflecting what I'm guessing is a more subdued market ahead of the interest rate decision. But very interesting here, institutional profit taking and ETF flows are relatively flat when we have seen such a surge prior to this month in terms of crypto and ETF flow rates. What are your thoughts on crypto action, particularly Bitcoin?
Well, what we have seen over the years, actually, is anytime that Bitcoin has really just kind of stagnated, coiled, traded in a pretty tight range, that has been the precursor to a pretty violent move. And not months away, but pretty violent move, typically, within a very short period of time. So the 110 level was very significant to hold as support. I know it did dip below there a little bit, but it recovered from there. 110 was very significant. 114 by the same token, that's resistance that Bitcoin can't seem to push through. So that's that tight range that we have seen. I would expect within the next week or so, ahead of the Fed meeting, which is on the 17th, or the Fed decision on the 17th, I would expect Bitcoin to make a big move here. Do I know if it's up or down? I don't. If it holds the 110, I'd be bullish. If it, can't break through 114, I'd probably be somewhat bearish. But history tells us that this consolidation sets us up for a pretty violent move.
Well, I wish you had that crystal ball, Scott, because it would be great.
Too.
It would be great to know which direction it was going to go in. But thank you for the levels and the historical perspective too, with it trading really tightly range bound there. I want to close out with talking about energy prices. I'm looking at the price of oil up almost 1%, for both crude and Brent right now. Following OPEC Plus's output hike, which was, widely sort of expected, but seen as modest overall.
It was modest. It's significantly lower than the last two hikes that they've had. I think this was 137,000 barrels. The last two were respectively 3 and 400,000 barrels. So this one was very moderate. And to me, just like gold has been a buy the dip and will continue to be, oil to me is a sell the rip. Now, I wouldn't count today's price action as a rip higher. But the bottom line is, if you really look at the fundamentals and look economically worldwide, there's not much to me that says that oil is going to move higher. You know, the demand is not there. We're coming out of the big summer driving season now, and economies around the world, including China, which is, you know, we know the demand there, there is no demand, or, you know, it's very, very small. And here in the US, with the economy putting up numbers that are not conducive to people really going out there and spending right now, I would still expect oil to really be on its heels.
And Goldman Sachs put out a note over the weekend, I'm sure you probably saw, just saying they expect a slightly larger oil surplus based on some of what you just said there in terms of demand, and left their price targets for Brent and WTI unchanged for the year, but projected for 2026 an average of $56 for Brent and $52 a barrel for WTI. What do you think about those numbers?
I think we get there before 2026. I think we're going to break 60 on the downside sooner rather than later, especially if we, you know, get CPI numbers again, that if we start to see inflation moderating a bit here, coming down. You know, the eco data has not been great for the consumer, even though the consumer has remained relatively strong. So I have been an oil bear. I continue to be, and I think we reach sub 60 maybe sooner than Goldman Sachs is expecting it to.
Well, Scott, we appreciate you being with us to talk commodities today and all of that trading action. That's Scott Bauer from Prosper Trading Academy.